Hello, traders. It's 8:01 a.m. Chicago time on the 6th of November, 2019. Thanks for joining me. It is Wednesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning on episode 1633, we're looking at a market that is mixed at best. We do have, we're higher in settlement across the indices, in range so far, in value across the board. But looking kind of weakish, in my opinion. There's been a little pop here recently, but overall the market's tracking a little lower. The bonds are the leader today, up 26 ticks on the futures. 0.51%. Gold is at $14.90. Gold, the old heartbreaker, just keeps straddling this 1500 level, pushing higher, pushing lower, pushing higher, pushing lower. Today, it's up $6.10, trading at $14.90 or 0.42%. The Euro stocks are higher by 14 points. The DAX is up 31 points. Crude is off 15 cents, trading at 57.08. The dollar's also off 18.5 cents. Those are the two products that I'm watching that are off. Everything else seems to be green, but only slightly in most cases. Again, the sentiment is mixed in this in the extended hours in the overnight session during the U.S. Overnight. So that's where we stand this morning. The theme of the market that's likely driving the narrative is, again, focus remains on trade. China said it seeks full rollback of tariffs before signing phase one of the trade deal. U.S. thinking about such a move. China is basically saying, look, nothing's going to get done. Nothing's going to get done without a clear plan to remove these tariffs. Otherwise, we're not signing. Xi Jinping is heading to Brazil for I think an emerging markets conference, this may have been an opportunity for these two presidents to meet and get this done, but it doesn't look likely. So they're still negotiating when, how, and under what conditions they will meet to sign these agreements. European PMI services showing signs of stabilization. That's why we have good, steady, positive day in the DAX and the Euro stocks. The European area PMI services are holding on to expansion territory. Germany beats. So does the Eurozone and Italy. Spain is in line. Spain misses and France is in line. Also, Germany saw a rise in factory activity. Again, potentially more indications that the economy is stabilizing. So that's where we are. We did have an economic release a half hour ago, nothing major. And looking ahead at what may be coming, we do have Feds Williams speaking. These guys don't really move things around much anymore. We do have crude oil inventories and gasoline stocks at 10:30 Eastern, an hour in. We have Fed's Harker at 3:15 Eastern. And then after the market, we have the Australian balance of trade number this evening at about 7:30 p.m. Eastern U.S. time. So let's hop on over to our review segment and see what was expected yesterday. So the primary scenario yesterday is balancing on the open. We were at that time, it did drop a little bit, but at that time we were opening in range in value. The expectation is for a sideways open that drifts down, tests the overnight low or the prior day's low, bounces back up and finishes lower. I was looking for 3070 and 3065 as potential test areas. The secondary is a push-up that fails at the overnight high and then stabilizes in the middle. And then the third is a breakout of balance that we had on Monday. with a test down into the point of control and then a push higher and a trend towards 30.95. Let's see what we did. Scenario one definitely in play yesterday, played out very nicely. We did have somewhat of an open auction. The market did come back and test higher, which looked to me like it may be scenario three, not sure. And then it just flushed the longs out. This was a big rotation down on pretty good volume. You can see the delta dropping as the bid's getting hit aggressively. And then from there, it was all about finding a pullback to extend the range down. And remember, I was looking for 30.70 and actually the gap mid, which is 30.6875, not 30.65. I was looking for the gap mid, and it stopped just 4 ticks short of that for a bounce. This is the first structured opportunity. We have an impulse pullback continuation, but for the day we still have had the mid, the prior close, VWAP, and the opening swing low all in one area, and looking for an opportunity to target the last low at least by 2 ticks. So in this case, the bid was at 30.70 and a quarter. And what does it do? It pushes to the point, to the IB low, pulls back and goes right into, fills that 30.70 and a quarter, and then pushes back up. And then we end up with a market that is somewhat balancing again, somewhat balancing with somewhat of an unfinished low. I want to show you what that looks like on the market profile. So let's move out a little bit on the market profile. And what we see here is quite a bit of structure that is not entirely complete. And so what we have down here, let me change the color to like a bright blue here. Bright blue, please. Okay, so we have this trend day that ends up bouncing out at the high. So we expect the next day to be a continuation day. We get the continuation day. We have a nice big gap zone here. The day after that was a bearish engulfing day. Opened in the middle, tested up, tested down, finished right here. The day after that, it opens down below. So follow the green, as they say. It opens down below and then tests higher, tests lower, and then consolidates and tests higher to finish near highs. The day after that, it opens, tests higher, comes back down, and then comes back up or whatever. And what we have here is a set of consolidations, and this is the market basically doing a very, very good job seeking balance, seeking value above the 3,000 millennial figure. And then we get this gap, which leaves us with a gap zone right here. Now, most people think the gap zone is right there to there. It's not. This is an area that didn't get auctioned on the way up, so there's a structural weakness there. And then we get the gap zone on Monday. So that was non-farm payroll. Then we get the gap zone on Monday, which shows structural weakness. In other words, a zone that has not been auctioned through yet, and we're pushing into it. And so what we have is a market that is balancing out. But look at what's happening here. The point of control is shifting lower, lower highs, lower lows, one-time framing down on the daily. My expectation is the market's likely to facilitate exploration lower towards 30.60 from here, more likely than it is to go higher. Now, this can be seen, if I did an all sessions, this will look like a flag after a rally. And I'm not saying this is a bear territory here. Get in there, margin up your account and get short. I'm simply saying that the exploration to the short side looks to me incomplete, with quite a bit of structure still that is likely to get tested. There's quite a bit beneath us that was not cleanly tested. So let's zoom in a little bit to the profile, and we could see that there was a double TPO high, although the last TPO was done in the last 15 minutes, so it's not as great as when we have it in the cash session. We have a double TPO high. We had a double TPO low on Monday. We have a low with a one tick, three TPOs with one tick probe yesterday, which was the low, and then a retest at 30.70 versus 30.69.75. And then the market finished out of value to the short side with lower highs. Okay. And what that's saying structurally is that the market's unable or is not successful in its current condition with the current information. It's not successful holding on to these higher prices. So you can see this ledge here in the profile, which was nicely tested yesterday, and then the market was much more comfortable trading beneath. So to me, this looks like an attempt higher. As long as we hold below 30.7750 or so today, it looks to me like it's likely to test higher. If it does, for a rotation down. The volume has been light-ish, but pretty strong for a market that's in a rally, and that's the structure. So what I'm doing here is getting rid of all of the lines and the indicators and all that stuff, right? I don't really use indicators, and looking at the structure and the narrative itself. Again, this doesn't mean that this is a swing short up here. It may work out, don't know. But in general, the market is rejecting these higher prices. You could see that also in the Russell. You could see that it pushed up and it left this nice wick on this 15-minute chart and essentially felt much more comfortable trading underneath the 1605, which was Monday's high, and it ended up finishing with almost a double bottom, and it looks like it'll likely more easily facilitate trade lower, and the target there is 1589, and the Russell looks like the likely next structural test area. So that's where we stand this morning. Again, we still have this gap area that is untested, unknown, never been tested before, new all-time high territory. And it's likely to continue lower. Okay, so again, not making a case for shorts here or buying puts or selling calls or whatever, unless you're looking at individual stocks. Overall, it just looks to me like the market's having a hard time sustaining these higher prices currently. Now, at any given point, we could get a tweet, we could get news, we can get whatever, and that changes everything. But I'm simply reading what's to the left and what the narrative is saying, and what it's saying is the market's facilitating lower more easily than higher. So here you see it. Again, you see this test up, and then immediately the market rejects it, leaving a nice long wick up top and an incomplete looking profile down below. There's no excess at the low here. So that's where we stand. Looking at the overnight session, Look at the overnight session, another session where the market is somewhat compressed. The volume is the first thing I'm noticing in the overnight session. The volume is in line with historical overnight volume for the U.S. session, but a god-awful trade throughout the evening. Even after the Europeans open, we get a little more volume coming in, but honestly, there's not much here. There's just, it's been kind of squeezing higher, but still it hasn't accomplished much in terms of how it's squeezing higher. We are above the mid VWAP, the overnight point of control, inside of the prior day's range, above the prior point of control. Those are all kind of factors that tell us how price is being accepted. Remember, I'm not going to give you a crash course here, and I'm not going to lecture Just remember, the market is a price discovery mechanism, and its primary directive, the market's mandate, is to find balance, to find efficient prices. What is an efficient price? An efficient price is one that facilitates buying and selling efficiently. So this is what the market's after. So despite all of your indicators and people who say that they're gunning for stops and all that stuff, and that happens on a short-term basis, and I'm not speaking on that 2-3 second time frame. I'm looking at how is the market facilitating price discovery? How is the market facilitating price discovery? And the way we study that is to understand how much volume at price went off at various levels, and how is the market accepting higher prices or not? How is the market accepting lower prices or not? And the market's process is to test up, find the opposing force, the sellers, come back down and through, find the buyers, and then find something in the middle that brings the highest number of buyers and sellers in that moment of time, given all of the information that's provided, including geopolitics and everything else. Capiche? So that's where we stand. The overnight session is not offering much up other than it is above mid VWAP and the overnight point of control. So it's hanging on pretty well to the higher end of the overnight session, which is still in the middle of yesterday's session. Let's look at the order flow for a minute. This is ctbookmap.pro. You can see that in the overnight, let me close the trading panel here. You can see that the overnight is not really, the price discovery process here in the overnight session has not been all that efficient. We had liquidity throughout the night at 30.76. Remember, the overnight high is 77.25, which we kind of popped through just now. But most of the evening, 30.76 has had a little bit of liquidity there, and the market went up and collided against it, pulling back to the last zipper, pushing through, and now testing that zipper from above. My expectation, again, is that it is likely to walk itself down to the next zipper right down here. Walk itself down to the next zipper, consolidate at the open, and then decide what it wants to do, whether it's up or down. My expectation, my primary expectation is lower. We're likely to test that 69.25, 68.50, 67.50, and then start walking ourselves down to that 30.65, which was that double TPO high and the bottom of the gap zone. That's really where I'm expecting this thing to go. We'll see. 30.65 is last week's high. Okay. So liquidity-wise, what is out here? 30.80, 30.66 ahead of the 30.65. 30.65. The 30.65, that's correct. The prior weekly high, there's quite a bit bid here. So this is the prior week high, and liquidity and stock zone and all kinds of fun stuff. 63.25's got a little bit of liquidity that's been sitting there. Up above, not much. 30.80 and 30.85. Again, those are strike prices for options on futures. So that's where we stand. So let's take a look at where we're likely headed. Oh, one thing I wanted to say, next week I'll be shooting a video with Anthony Crudelli, and then there's an event that's going on, I believe at TT's Tech Tap Lounge afterwards. Please look out for an invitation to that event if you happen to be in the Chicago or the surrounding areas. There's a limit. I think there's a cap at 200 or 300 people, and it's getting closer. There's going to be a panel on which I will be. So I'll be shooting a video in the morning and then at this event in the evening. That's on November 13th. I'll put an announcement about that soon. So what have we got? On va où? So opening in range, in value, my expectation given the stance overnight is an open auction that squeezes higher, pushes through that 77 and a quarter, potentially tagging the 30.80. If it falls back through the 30, 70, 77, 50, 78, I'm going to look short. I'm going to look for it to push into the 71.50 and squeeze this overnight low, get below that weakish low that we left behind at 70. This is where I expect it to do a little bit of bouncy bounce here with the overnight point of control. And then I'm looking for 30.65 for a test and a bounce into the close as the market adjusts for the close. This is what I'm looking for as the primary scenario. I believe it's a higher probability scenario at the moment. Again, all bets are off if somebody announces something. The secondary is an open that skews downwards, moves into 71.70, tests the overnight low, and then is unable to hold on to these prices like we've seen for the last couple of days, pushes back up, consolidates the overnight point of control, and which is kind of around yesterday's point of control, and then to start to squeeze higher in a further consolidation day. We do have an MC point of control, by the way, at 30.77. So when we combine these 2 days, if we combine these two profiles, we have a very, very balanced profile. You can see it there with a point of control as indicated here, with a point of control at 30.77. And that area is going to be key. Do they hold the point of control or do they reject it? If they reject the point of control from below, we're below it now, just 2 points. If they reject it from below, I'm looking short, and I'm going to look to hang in there for 65, initially for 70 and then 65. So anywhere between 75 and 77. Entry with a 3.5 to 4 point stop gives me 1-to-1 to the 70, and then gives me 2.5 to 1 R to the 65, making it a viable trade. I know it's a lot to share. I'm way over my time. Good luck today, and I'll catch you tomorrow morning. Take care.